You keep hearing talks of a soft landing. Yes, certainly the hard asset people who have been saying this stuff for a very long time are, but I mean, let's take a look at it. You got a 30-year mortgage that just tripled in the span of a couple of years to its highest rate in 23 years at 7.5%. You got household savings in the United States, which totaled 2.1 trillion after the stimulus deal in 2022. It's been declining by over 100 billion a month, and now savings have been depleted to just 190 billion dollars remaining. So you have people have overextended themselves. Their savings have been depleted. Recently, credit card debt hit 1 trillion for the first time ever on household debt. All in total 17.1 trillion in household debt, but 1 trillion on credit cards. I mean, how does the United States pay back $33 trillion in debt, which excludes Medicare, Medicaid, Social Security, and government military pensions, which pushes our debt to $155 trillion against a $5 trillion asset base? This is all, Google it, you'll see this. You know what the largest asset is in this country? Student debt, representing over 40% of our assets in this country. Somehow they're considered an asset. But when you realize that the central banks, which are the most well-funded and well-informed traders on the globe, have bought more gold than at any time in the last ever in the last 15 months, ever the most gold that they've ever bought. So they understand it, and they're front running. They're front running, I think, the inevitability, and they're using the suppression of the Western markets, the levered futures markets, to run cover for draining the exchanges and for taking possession of massive amounts of gold and silver, which I think, what is it again, by the way? The only other tier one reserve asset will be part of a new system when they flip the switch. Don't know when that's going to be. I never thought it would be August 22nd, but it will come. It'll come when all of their pieces are in place. They're building their chessboard, I guess. First of all, in terms of the consumer, as I mentioned, they have nothing in the way of savings. It's virtually nothing in the way of savings. The first time ever credit card debt hit $1 trillion, 17 trillion in household debt. Interest rates are rising. So you say, buy bigger cars and bigger homes. For the last decade, you could buy a car and take motors for 0%. Zero. 72 months. And now those rates are 7 or 8%. You could buy a house 2 years ago at 3%. And now they're almost 8%. So the consumer is cash strapped. The businesses that employ these consumers are finding it harder and harder and harder to stay in business in an environment where the rates keep going higher and higher and higher. The cost of doing business has never been more expensive. So they will lay off people who may have a 4 or 5% mortgage on a $500,000 house. Sounds great right now, right? But not when you can't make the payments. So there will be defaults and there will be bankruptcies. Right now, this last month was the highest filing for bankruptcies ever in this country. So you're seeing bankruptcies, you're seeing huge indebtedness, you're seeing nothing in the way of savings, and interest rates going higher. So the houses and the cars that you talked about, is that a thing of the past? You tell me. When interest rates are at zero, that's why they suppressed interest rates for so long. Interest rates are supposed to be controlled by the market, not by the bankers. And the bankers suppress interest rates to create this perception, this illusion of prosperity. But when interest rates rise to where they really should be, to factor in the risk of this country and its indebtedness, well, you tell me, will that be something that we continue to see where the West consumes and consumes and consumes? We've had the privilege of being the world reserve currency and to be able to print whatever we wanted. And when you talk about the amount of money that's been printed, like I said, 375% increase in the last 4 years. Where did all that money go? That money went into asset prices, stocks, bonds, real estate, cryptocurrencies, all of that stuff, which has been distorted because of the misallocations of resources and capital. The distortions in asset prices are supreme, as is the demand that was fostered out of it. So yes, that is the way that it was. But like you said earlier, all things come to an end. Are we near the end? I don't know. But I will tell you that I think it's a fact. A trend of reducing holdings of U.S. Treasuries has emerged. Saudi Arabia's holdings of treasuries fell to a 6-year low this month, or in June, rather. There's a lot going on, and what this system also lacks is transparency, because when you have a questioning of integrity and honesty and there's no transparency, you know, do you really believe a lot of these things? But all I can tell you is that I think the U.S. is overdrawing on its credit and its reputation. And look, forever there was no better alternative to the U.S. dollar, and the strong economic power allowed the dollar to remain and to maintain its hegemony. But things are changing, and now you have the new development bank, which can also make a lot of these loans outside the dollar. You mentioned the U.S. makes all of these loans. Well, the new development bank, which is kind of like, I think it would be like maybe like the IMF, they are now going to issue loans to all of these other developing markets, and many of them will be outside the dollars. Are we entering into a new system? And that's kind of how I feel. I mean, look, the dollar is affected by political, social, and economic instability. And look around you. I mean, if you're here in this country, you see political instability, you see social instability, see economic instability. So where does that leave the dollar in the grand scheme of things? It's the nicest shirt, the best smelling shirt in the dirty laundry basket. And, you know, what if all of a sudden there's a new shirt that appears, one that has a backing of commodities, one that is settling the majority, over 80% of all the oil sales in the world, one that is being dispersed among the majority of human population. And we're not there yet, but you can see that the chessboard is lining up to where that is where they're trying to go. Will they be successful? Only time will tell. At first, it's going to be a lot of settlement in local currencies. Yes, I wouldn't be surprised to see at the very end of all of this restructuring 2 currency blocks, one issued by the IMF, one issued by the BRICS, something along those lines, where you see an attempt by the BRICS to issue a reserve currency, not just a settlement currency. What does it look like? It looks like a situation where the dollar no longer has the this globalization trend that we've seen forever. Well, if the dollar's not accepted, we have to start doing things here at home. We need to. I mean, I, for one, if I had my druthers, I would close all the military bases around the world. I would protect our borders. I would use the money that we are wasting on other parts of the world, to build up the infrastructure in this country.